Cain, Waters and Associates, also known as CWA, is a CPA firm providing comprehensive business planning, personal financial planning, accounting, and tax services to over 1,600 clients in 49 states. CWA is also an investment advisor registered with the Securities and Exchange Commission. Their presentation that follows provides information about the type of business decisions you will make throughout your career as an orthodontist. Most residents and recent graduates are concerned about two things: one, debt, and two, finding a place to practice in a very saturated orthodontic field. The following set of slides will show you what CWA believes are the critical reasons for ownership. You will have the opportunity to make significantly more money in your lifetime when you own a business. You will build equity in the business, which can potentially turn into millions of dollars. As a business owner, you have the ability to better prepare for retirement by setting up a pension plan either your first year of business if you acquire a practice or within the first few years if you start a practice from scratch. As a business owner, you can employ significantly more tax planning strategies than you can as an employee. Lastly, as a business owner, you are in control of your own destiny. When working as an employee, an orthodontist will typically be paid $1,000 per day. The typical orthodontic employee will work 200 days in a year, earning an annual salary of approximately $200,000. As an associate, it is estimated that you will do 22 starts per month, generating approximately $100,000 per month in production, which translates to $1,200,000 annually. As an owner orthodontist, you can expect to net 45% of that income and earn approximately $540,000. Based upon CWA's experience, income typically doubles when the orthodontist transitions from the associate level to the ownership level. As the owner of an orthodontic practice, you will build equity in the business and have the potential to transition a portion of the practice to a partner down the road. At a minimum, the value of your practice when you transition is worth somewhere in the range of 70 to 90% of collections. A general rule on valuations is this: if the practice has low overhead, updated equipment, nice location, and is in high demand, the value of the dental practice will be on the higher end. In the current climate, most consultants see a valuation between the high 80% or low 90% of collections. It is never too early to start thinking about retirement. You will need millions of dollars to prepare for retirement, and being a practice owner provides opportunities to effectively save for retirement. But you must begin now. This illustration is based upon a 30-year-old who is just beginning to save for retirement and is able to save approximately $70,000 per year in a pension plan. Assuming that the orthodontist needs an income of about $13,000 per month in today's dollars, and inflation remains at 2.5% annually, the orthodontist will need roughly twice as much to cover living expenses 30 years from now. So the retirement target for this orthodontist is $26,000 per month 30 years from now. That's approximately $312,000 annual income needed in 2046. With a rate of return of 8% per annum for investments, this orthodontist will need approximately $8,500,000 to successfully build a retirement fund. This slide illustrates the importance of beginning retirement saving as early as possible and the advantage an owner has to reach his or her retirement savings goals. As an employee, the amount you can save for retirement on a tax-deferred basis is limited by the U.S. tax laws. As you can see, those limits significantly reduce the amount that an orthodontist will have at retirement. From a financial planning viewpoint, taxes will become your evil. As an orthodontist, you will quickly enter into the highest federal tax bracket. At 2016 rates, income over $231,450 is taxed at 33% federal and on average another 5% state tax for the 42 states that have income tax. Most new dentists are concerned about the interest they pay on student loan debt, but we frequently tell young business owners that there is an exact order of how to manage debt from a financial standpoint and certainly a tax standpoint. Dental school debt is an evil, and the interest does not provide the benefit of a tax deduction at the income level that an orthodontist will typically make annually. The key to lowering your tax burden is to follow these simple set of steps. Get out of residency with a plan. Get some experience and ideally save some cash, approximately $30,000, to make yourself attractive to banks. Find a practice to buy so you can take advantage of the 5 benefits mentioned earlier in this presentation. Invest in the practice, marketing, technology, interior decor, staff CE, consultant in the practice to improve efficiencies. Have a vision and understand that you must prepare for retirement through a pension plan. Keep your tax burden as low as possible and manage debts responsibly. The goal is to manage good debts like the new home purchase, the practice loan, the potential building, and then work on a plan to pay down the student loan debt, but never at the consequence of making extra payments to rid all cash flow and not fund the pension plan. As an owner, if you make $300,000 pre-tax income and you fund your pension plan with $70,000, you will only pay taxes on $230,000. This provides you with a nearly 33% return on your investment into a pension plan. The 33% is a larger return than the 6.8% interest rate on your student loan, making the pension contribution a better financial decision than additional payments on your student loan. Debts are emotional, and we strongly suggest having a team show you the consequence of your decisions to manage debts. As an owner, you are in control of your own destiny. The advantage of working for someone is figuring out what business decisions are effective and which aren't. The key is surrounding yourself with the right team of people to share your core belief systems. The key is taking care of these people and sharing with them the success you achieve together. CWA wants to represent you. We work with over 230 orthodontists across the country, and it's our goal to get you into ownership ASAP. If there is a practice opportunity that you would like us to review, then CWA will review the following at zero cost and zero obligation: employee contract, orthodontic practice valuations, tax returns of an orthodontic practice to help determine a value, coaching calls on how to interview for an orthodontic opportunity, coaching calls on how to find orthodontic practices for sale and to determine which offers the best terms for your personal financial situation.